Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone midday here, which makes it 1100 UTC. Big shout out to everybody that's joining the stream live today, as well as everybody that's watching it on catch up. So, how is everyone doing today? Please do let me know if there's any issues with the sound or with the visuals. We'll give it a little minute just to let a few other people kind of wander in. And then we're going to crack on with our Alt Request Wednesday. In fact, while things are starting to kind of load up, guys, give people a few more minutes to get in, let's take a look at Bitcoin, shall we? After a little bit of a pullback today, got people sweating a little bit. Craig Nitpar, good afternoon, good morning to everyone. McRule, how are you doing, bud? Got the crew in and looking strong. So, I thought it might be a good idea. I know we touched upon this on Monday. Not going to get too bogged down on BTC today, of course. We'll just take a look at some alts. If you guys have got any requests, do let me know and we'll just dive into those. But I did think it was worth kind of laying this out on here as well to look at where we are. Whack! How are you doing, my man? Icho as well. Welcome. Fantastic. Good to hear. Guys, if there are any issues throughout, please do let me know. Also, if you've got any questions or anything as you go, do let me know. And we can always stop and make time to run through those. So, just very quickly, let's zoom out just a little tad more. Sometimes these things can seem a little bit clearer when we zoom out. Let me just turn my time sections off, which end up looking like pajamas. Here we go. So this actually builds out a lot on the daily as well, but really for cleanliness, get rid of these. I don't think there's any denying really that we can see some really, really clean lines here. Now, I've been asked a few times about why I picked this wick on this particular candle, and for me, it's the reaction that it had off of it. Metis, yeah, sure, buddy. Yeah, no problem. If I forget, just give me a nudge. So it's this down wick here, right? Look, when price interacted with this level, we saw a really, really big reaction back to the upside, right? So naturally, what we do first of all is we look to the left, and then we get that here, but it's very, very tricky to see any kind of clear level there. Nit did reach out in DM. Sorry, mate, I haven't got your DM. Do try me again. I'll have a look. I'll have a look for that later on, buddy. If it's Twitter or not sure if it's through Discord, sometimes they limit the ones that get in, but do ping me on there. If not, pop a comment in on one of my posts on Twitter. I'll pick it up and we'll get in there. But the question I had is, how effective is the Bird membership for someone working a regular 9 to 5 or longer hours? Yeah, it's a really, really good question. I think for me, I'm always incredibly honest about this. Look, myself and the other analysts that work with the Nest, we do so because we have a really, really great belief in what it is that they do. And we're really, really proud, certainly me, to be part of it, right? Now, for me, we do offer a call service where you get access to the trading team calls. I know that works really well for some people, but really our overall aim is to try and help people pursue this either as a very passionate hobby for a little bit of earnings on the side, or for people that want to really kind of pursue this as a change in lifestyle or even a full-time career. So in terms of an education space, in my opinion, there's none better. We've got a variety of traders, from algorithmic traders, system traders. We've got people that know how to build bots, indicators. We've got price action traders like myself, fundamental analysts. We pride ourselves on trying to work with some of the very best and up-and-coming analysts in the space. And therefore, you get a really, really good rounded education. There's tons of educational resources, videos, lots of exclusive content as well. But what I'd probably say, mate, is, because I can come across biased because I've been there myself, but I think maybe take up the offer for the free trial. You get a week's free trial, or you can, and you can engage with the community. You can see if it's something for you. I think, like with most of these things, you get out what you put in. I understand it's a really difficult thing to juggle around the time frame of having a 9 to 5, but actually, I think all the analysts that work there have had the same thing, right? None of us came from traditional finance backgrounds. Some of us dabbled, but it was certainly never anything career based. So, yeah, come and try the trial, mate, and really kind of have a good idea about what it is that you want to achieve. If you go in with a clear direction on what you want to do and how you want to develop, then it's a really, really superb place. It's also a great place to go if you don't have as much of an idea and you want to find where you are. But in truth, my advice always remains the same. With trading, You need to understand the niche that you want to trade in. There's a lot of noise in the space. There's a lot of noise on Twitter, a lot of people trying to sell or offer you things, which I'm part of that group. I'm not saying that I'm not a very heavy believer in paid services. For example, you pay for the best solicitors, you pay for the best medical treatment, etc. But you can get really, really lost really quickly if you don't have that kind of clear idea. So think about the time frame that you've got, how it is that you want to trade, and then from that way you can kind of find a thing. But you can always reach out to me on Twitter and stuff like that as well, mate, as can all of you guys. So with that part kind of tucked away, let's kind of look at the levels that we've got really, really quickly here on Bitcoin. Now, I don't like overcomplicating things for myself. I'm a simple creature, right? So when I look at levels and I see levels like this, now, once I see that the price has stopped here, for me, that's significant. Look at the wick that got bought up here. Price ultimately couldn't reverse. We got this pin bar candle here that kind of gave us an indication that we'd run out. This is typically to take liquidity resting above highs here on the lower time frames before fueling a larger move to the downside. This line here is significant. This is our 30,000 line. You're very welcome, Nit. Why is this significant? Because typically round numbers are heavily favored, right? And that's because people see those numbers, they set a psychological level, they resonate with us, but also they're levels that people think, look, if I'm where am I going to sell? I sell at 30K. Where do I want to buy? I'll buy at 30K, 20K, 10K. And actually, as you go down through these levels, you can see the key amount of interaction that price often has. So that's why that level's on there. And the weekly open we'll get to, obviously, a little bit later down. This is our resting liquidity on a weekly scale. Yeah, so the expectation was, as I said, if price holds above here, we build a bullish structure, then I expect us to target this first before potentially moving higher to fill these imbalances or inefficiencies here, these fair value gaps, all right, for the market to rebalance, reprice, and potentially then look for price lower down. Now, let's pop this to a daily. So hopefully you get that, guys. So all I'm doing with things like this, right, is I'll very often just either hover my cursor or get a horizontal ray. Yeah. Now, if you're a Mac user, I don't know what this is on a PC, but if you hold the command button down, can you see on the left that button flashing up? That's our magnet. So you don't have to keep flicking it on and off. If you just hold that down, it will then snap this to either the body or the wick of the candle, right? So when I'm here, I'm saying, okay, well, look, we've got this level. This is the very high. Yeah, let me make this a bit fatter. That's the very high. And actually, you can see price interacts with this here. But for me, the reason price is interacting here is because the liquidity that rests above. So that's a natural place that if you're a buyer lower down, that's a natural area to target in order to sell. Why? Because that's where stop losses reside for people that were short, meaning that they're buy orders. Yeah. And it also will trap some breakout traders or people that are late going long. Great way to offload all of your positions to willing buyers. Yeah, remembering these people are willing to buy off you higher up. Yeah. And then when the market flushes, what happens? The market comes down and does the reverse. Yeah. So sold to the willing buyers up there. Thank you very much. Market then reverses. Where are their stop losses? Majority under here, along with other breakout traders as well that are looking to trade this to the downside. So then what happens is we then generate liquidity in the opposite, right? So then the people that are going short here or the people that were long here get those short orders filled with buy orders and price flicks back up. That's how I'm looking at the market, right? So when I've got this level here, yes, this is significant, but it's not what's capping the market. Sebster, welcome, buddy. Was on holiday in Wales. Fantastic. Got some Welsh family. Spent a lot of time in North Wales and Snowdonia, Aberystwyth as well. Just a beautiful part of the country and of the world. Really, really wild, really compact. Would absolutely recommend it to anyone. And really, really lovely people. Real sense of community in Wales. So now we've got this level. You can just hold your command key down or whatever the equivalent is on a PC and then look for like the best fit. Right now, when you snap it to this level here, can you see how the bodies just respect this line so well, and even some of the wicks? So what do we get? Resistance. Yeah, we get this deviation. Price can't get above it, sells off. Why does it sell off? Because it's not getting acceptance above here, meaning that there aren't the buyers willing to buy. It's not value here, right? So naturally, then when price corrects and price comes back down, it's looking for where the resting liquidity is lower down, yeah, where the willing buyers were before. And they're below these lows. All right, so you see we have a little reaction when we come below these lows, but ultimately this gets purged. Yeah, and actually if we draw a line across here, yeah, this gets purged. Price comes up, finds a little bit of resistance here, but notice how price is failing here. Yeah, to make lower lows. So actually it sneaks back up to this level. We have this big impulse here. This inefficiency here, this imbalance, this bearish fair value gap gets matched across the way with this one. Okay, and this is a teaching again, guys. You know, I'm a student of ICTs from many years ago, learned a lot from SC as well as some other people in the space. Very few original concepts in this space, right? So it's not. I don't ever try and claim any of these techniques of my own. I use a mishmash of different things that I've learned over the years, and this is something that in the newer mentorship, I believe ICT would refer to as like a balanced price range, right? Or you're looking for like an inverse fair value gap, meaning that with this being a bearish fair value gap, the expectation is for this to act as resistance. We get it here. Then when we flip it, and especially with an easy move like that, the expectation is that this is going to provide buying opportunities, but also this range is then going to provide support. All right. I'm not here to teach those kind of methods to you. I would always recommend you go to the source, which is ICT. You know, he won't certainly be teaching you about like sloped resistance lines, bits and pieces like that, or capping the market. Like SC is your man for that, and also Burb. Just for technical analysis knowledge, probably the very best that I've ever come across. But that's what I'm doing with the levels, right? So when we get back in here, naturally, yeah, we have our range basically at this point, right, which is this high to this low. So we want to mark that in. And then we're going to draw this midline in so we can get rid of the range. Okay, and then we're going to get rid of our fib, and this is our range. Super Shogun, hey buddy, how have you been? How have you been? Shogun, it just always makes me laugh. I think of this, I think I'm a bit older than most people on here, right? So I think of this old cartoon when my old man was still around that he used to watch. He was obsessed with samurai and like kung fu and stuff, which was the big thing, obviously, back in the 60s and 70s. I'm not that old, but my father was. So I was really into that when I was young as well. And there were these brilliant Shogun cartoons, always makes me think of it. And Chuck Norris actually was brilliant in a film called Shogun. Awesome, man. Good to hear you're doing well. Good to see you again. So look, this is our range. Price being suppressed below here. Yeah. Price breaks above here, retests this, finds support. Where does it set? Where does it go up to? Liquidity above here. So then we're saying to yourself, okay, when liquidity's been swept, what are we looking for? We're looking for price to run liquidity lower down and tell us one of two things. Yeah. We either take liquidity here, we recover it, showing strength, in which case we expect it to go higher, or if it closes below and we start to break down, for example, like we did here, look at the difference in these moves. We took liquidity here, came back to the mid, had a strong close below the mid, came back up for liquidity here and sold off down to liquidity lower. The difference here is we took liquidity from the highs, same as we did here, price corrected down, but found support at the midline. Yeah. Found willing buyers, found a market willing to step in and still say that there's value down here. So then the market gets that reaction where it pumps higher. All right. And now we're at a little bit of a crossroads here, in my opinion. The 30K level is key. We can see here again, look, support, close through it, flip to resistance, big upside wick showing us that the selling pressure is getting very high. Price ultimately broke down. So there is something to this. The other level that I've got here on a weekly scale is this one, right? So this high, why this high? Again, and this is to coin an SC phrase, which I love and made a lot of difference to me when I was learning years ago. What's capping the market, right? This price cannot close above it. However, again, you can see we took liquidity here, but then didn't take that low. Ultimately, we pushed up. If we look at the bodies of these, you can see price, very, very small price action. Another great SC saying, not here to shill you all SC, by the way, but no, I am. You should all really fucking listen to that guy and what he's got to offer. But small bodied candles lead to big body candles. I must say that every week, but it's so, so true. Small body candles, big body candles, small bodies, big bodies, right? Compression leading to ultimate expansion. The key for us is learning where the expansion is going to happen or in what direction. Oh, sorry, guys. Got a bit of a dry throat today, probably the 15 cups of tea. that I've had since about 6 o'clock. Right, so everybody happy with that? Levels, comfy with that? Not trying to teach you to suck eggs, guys. I know a lot of you are regulars to the stream, but I find at the moment, you go on Twitter today, you look at different reactions, people are really panicking. And I want to kind of look at this. I'm going to transition this onto ETH now to just show you this, because I think, look, Bitcoin's where it is. Look at it on a weekly scale, right? Bullish. Let's look at it on a daily scale. And actually on the daily scale, look, all that information that we get, look at this, right? Look at this. But also, if you were to say, where's the majority of pressure coming from here? Yeah. And I'm not teaching you how to draw trend lines. I'm using this just as an example of looking where the majority of the bodies are here, yeah? Where's price kind of compressing? We can see here, right? Let me do that in a nice bright color. You guys see that? That's actually too bright, isn't it? Do it in red, right? Maybe a little bit confusing because it's there. I just want to make sure it stands out. But see how price is ultimately getting pushed higher here into this wedge. Now, I'm not particularly a pattern trader. Definitely check out Burb if you are, or this amazing other CMT guy called Axel Kaibar. But the compression here is favouring a break to the upside. Now, whenever price is peaking above here, you can see that it's getting batted down quite a lot, but there's no doubt that the volume is not building, but the pressure, within here is building. And I believe it's about 70-30, the likelihood, or in the high 60s, that this breaks to the upside. The same as inverse, it would be more likely to break to the downside, all right? Now, we break down to the lower timeframes even more so. And these lines across here, guys, are our session breaks. And on the hourly, right, you can see even more so what happens here. Look at the strength of this breakout. Now, for those breakout traders of you out there, it's certainly not how I trade it, but something that you might find of interest here in terms of controlling the breakouts. A lot of people ask how you play those. Is what I'm often doing is I'm looking at the key break. So, for example, we would have this one here, right? So then price re-enters the range, not a problem. This is then the next breakout, right? This one here, which doesn't lead to anything. This one here. All right. This one here. Now, you might think, why the heck is he marking those up? Just looks like a madman. Well, because something I like to do is give myself a bit of extra confirmation, yeah? So with this breaking out, it's really, really difficult to know, right, if price is breaking out or if price is faking out. This was a little bit of a tricky one. So what I've done is I've marked the initial high from the breakout, because what we want to see is price come down, hold this level, and then push higher, right? So if we were looking at that in these terms, we'd want to see a strong move above, yeah? So an initial move. Then we want to see price hold this level. Then we want to see this, yeah? We want to see this broken. Yeah, that initial high. Not I. That's what I like to see. And then in an ideal world, on the lower time frames, you're then looking for the retest of this level and price to push up. Now, you don't always get that, right? We got this section here. We got that initial high. Price came down. You notice how it wasn't really holding this particularly well. I would have felt a lot more comfortable, say this, for example, and you can see how price is kind of holding this level, but then it just lost momentum and it went back in. Ultimately, with this one, it didn't really give us a chance, right? But you can see from the power in that move, the expansion, right, that price's intent is to move higher. But then as we're looking at price compressing here, we can see how every time it's selling off, those lows are getting higher and higher and higher, and price is just compressing ready for that pop, all right? So hopefully that's helpful, just in case anyone there is looking at this in terms of breakout trading. So before I digress any more, I've done well to keep that to 20 minutes for me. Let's just take a quick look at ETH, because there's some really interesting levels on ETH. I shared them on Twitter this morning. Just wait for TradingView to catch up. Don't do it to us, TradingView, come on. Well, while that's loading up, actually, something that I found interesting, which is what I wanted to kind of discuss today on ETH, because it's it's a part of my trading that I certainly use, but something that you don't often see combined, especially with some of the concepts that I use. Now, let's see if this is going to give us any of these levels, or if not, it's all right. We can just redraw them. Here we go. So, using exactly the same principles that we discussed, right? The reason that I was expecting some kind of reaction here, and I didn't call the short because we didn't quite reach here, but I was looking for price to kind of pop above here. And again, all this is going back to as our key levels here. Something really capped the market here, in my opinion, right? So, price came down and set a key level here. When it came back to this level, how price then moves through it is really, really significant for me. And we can see what an aggressive high volume move we had through this, right? We then retested it, confirmed it as resistance, and then we've sold off. So my expectation when we get back here, and although it looks like we tagged this, we didn't quite, a little bit of daylight above there, right? Now, these lines aren't designed to be perfect, right? Some of these do play really, really clean. But the idea is to give us an area, and then we want to see how price reacts when we're there. But what I found really fascinating about this, I'm going to focus on these levels here, is when price broke down here, it found resistance here, sold off. Resistance here, sold off again, right? Now, what I'm looking for with a level is how price has reacted there. So see this kind of V shape, price sells off pretty quickly, yeah? That's what you're looking, or that's what I'm looking for to tell me that there's some kind of significance in a level. Now, we get that here. Price comes in here. Now, it meanders a bit, but ultimately leads to a big drop. Same here. Now, when this comes through here, we get that initial reaction. You see how price doesn't really retreat. Then, like I said, you see we poke our head above like we did there, but this time we get the follow through. Let me just zoom in a bit. This time we get that follow through. We get that high volume candle that goes through, right? So then, like we would do with our low time frame setups, I'm looking for the displacement leg, meaning from this candle's low here. Why? Because this is the down candle that then led to that move higher, right? And then I'm looking for it when we have the move up for that first down close candle, yeah? And then ultimately, once we snap onto this, once we don't come back, yeah? Here, for example, we would just continue to move it up. However, we can see here, let me just make that a bit bigger so you guys can see it. Make it a different color as well so it stands out a bit more. Make it a different color so it stands out and makes it a really dark blue. There we go, right? So look, this is the displacement range, yeah? Price has made this move up. What I'm looking for here are these moves, these impulse moves, right? That leave our fair value gaps. This is what tells me that the market can be ready to make a move higher. Normally I do these in grey. I'll do, for the sake of the stream, I'll do the bullish ones in green. So then what we're looking for is for price to hold this. Yeah, we can get particularly technical if you're looking at, especially the new mentorship for ICT or those kind of areas. Certainly something I do. Let me just make that thinner so it doesn't clash. Is I'm also monitoring the equilibrium here. Yeah. So I don't really want to see price starting to close aggressively below that. And actually, while it's holding with those wicks, for me, it's saying that it's coming into here, finding buyers, and ultimately the next move is to the upside. Why do I have this range on here? Because I'm looking to be a buyer in the 50%, yeah, in the bottom 50% here. And in this fair value gap, that's where we can get involved and price can move up. We can then decant that information down onto lower time frames and then use that to make day trades. So, little ramble over on that one, right? But you can see how price is moving through these levels, yeah? What happens here? We get that move below this level here, yeah? But we haven't set that low, first of all. See how we set the high, first of all, retreat and then pump through it? Here we set this low, we don't come back to test it, and ultimately we reverse. This is a deviation, right? This is price deviating a level, taking out the liquidity below these lows, right? And using it to fuel a move higher. What often happens with these are people that are long from here, are holding the position, expecting higher prices. Price comes down to here to wipe them out, to take that liquidity, and then moves up so quickly because large players, institutions are getting their orders filled. You get that momentum, you get that huge buying pressure. And how do you know that that buying pressure is there? Or how do you know that, for want of a better term, the buyers have stepped in ICT purists will kill me for saying that, but again, I'm not a purist for ICT, but I do respect him massively and use a lot of his techniques. But for me, it's a simpler way to understand the markets in terms of thinking it of the buyers are there, whether it's one epically big, super huge whale, or whether it's a collection of those or institutions, hedge funds, however you want to see it. These moves, these large moves, that leave these gaps, in my mind, that signifies when big players are stepping in. Yeah. So we get this deviation, and look, it doesn't give people chance to get in because it's generated all of that liquidity by triggering all of these stops and triggering all these breakout traders, and they've taken the other side of those bets. They've taken all of those sell orders and just thank you very much. Have my buy orders in there. I'll fill all of those. Thank you. And then when that paradigm shift, if you like, happens, look how aggressive the move up is. So with that in mind, what are we looking for here? Well, for me at the moment, I know these candles look bad, right? And they are aggressive, but let's just look at who's outweighing the bullish and the bearish scenarios here, right? So look at the big white volume candles, our big bullish candles that we have here. They're still overpowering the black candles, which are our bearish candles. Now, what could be significant about this one here is that it could be about to leave a really, really big, high volume, bearish daily candle, right? Probably bigger than any of these bullish ones going through, probably be competing with this. However, when we look at this really large bearish candle here and this really large bearish candle here, when we look at it with context of liquidity, what does it tell us? Well, it tells us that this drive down lower, it was actually met with a bit of a bullish reaction. Yeah. Now that bullish reaction can be twofold. It can be the fact that the market's ready to drive lower. So price is getting manipulated higher to take out stops, to fill larger positions for a bigger move down. Yeah. The same way that this one can be seen in the same way. This is the market pushing price down. And a good thing that I use for this is volume, right? So quite often with volume, what we can see is, look at this big candle here. Now, I know it makes sense, right, that there's a lot of high volume bearish selling. So you're going to get these big bearish candles. But if we want to look at a reversal point here and say, okay, well, there's these high volume bearish candles that stand out, right? What do we get there? We actually get a reversal, yeah? This high volume bullish candle here, yeah? We get this corrective move after it, all right? This, which is the high volume bullish candle here, what do we get? We get the opposite. We get the pullback, yeah? So it's kind of like a counterintuitive way of thinking. Now, I never use it on its own, but sometimes I do think that it can add some really good confluence. So here as well, we had a B-Pro divergence here. We've got these bullish candles coming up here. Yes, it represents the price action driving up. But for me, I like to look at it in the way that if there's all that energy and momentum going into driving the price up there, big players stepping in, high volume, then we could be taking a correction after it, right? You know, the markets don't just deliver real potent up always or down always. Same way here, right? Yes, we've had the big selling pressure, but we did get the relief after it. Same here, right? Large bearish volume candle gave us the hint that the reversal can happen. Now, you don't ever want to use these things. So I don't mean to keep saying you. Obviously, you guys do you. This is just me sharing my thoughts. But I just want to use it with confluence, right? So I'm saying, okay, if we're taking out a low, yeah, price is coming to this area. I've got my high volume bearish candle showing that price is kind of getting pushed down here. Is that a manipulation? You know, is that price kind of being forced down there to convince people to go short to fill long orders? So then we can just bring in simple market structure, even on a daily scale. We've got a high here. Yeah. You see this high just in here. Why is this a high? Because that candle is flanked by two lower highs, right? So I'll draw across this line again, except we'll do this one in red. Price comes down, dips back, breaks structure to the upside. What do we say that we want? We want the displacement leg here. Why this leg? Because this is the leg that led to the market structure break, yeah? So as we get that, we're then looking within our range, lower 50%. Do we have an inefficiency in here? An imbalance, our fair value gap? We do. That's then where we're looking for price to react and go higher. Okay, so then once we get that, if we want extra confirmation, we see this bullish move. Yeah, again, impulse candle, energetic, leaves displacement, leaves this gap. Price then closes, retests this level, which also falls within a bullish fair value gap, and ultimately price moves higher. So these levels, we can overlay these and we can use these, but you always want to make sure that there's confluence. Yeah. So whether you're using the levels, whether you're trading naked charts, you're just looking at clean highs, lows, there's a significance to levels and how price interacts. And that's what brings me on to this before we kind of go on to our next 30-minute section of alt requests. 1 second, I'm just going to take a sip of tea. Right, so what we can see here is we're now moving in between ranges. Price came up, reclaimed this level. Let me just get rid of this stuff so it's a little cleaner. We've come up, we've reclaimed this level, right? Now you can see on this scale, and this is why it always pays to zoom out sometimes, right? Let me just turn the volume off. Is that you can see here how price is holding, holding these levels. Get these wicks to the downside, but you see you're not really getting many closes. You get these little ones here, which ultimately end up being the liquidity sweep here, which comes into this order block, right? So again, order blocks, I would always recommend studying these. For me, I favour the bodies unless I've got a fair value gap immediately afterwards, in which case then I allow for the wicks. So whatever you're doing here, however it suits your style, if you've got that, or if you've got this. For me, I like using the bodies unless you get that immediate fair value gap afterwards. And what we see here is we drive into this order block, right? This is where we expect buyers. This is where they bought before. Price moved away. The fair value gap gives this extra confluence. Then we hold this level. Price dips into this before this fast move away. Often these moves don't allow people to get involved. So what are we looking for here? Well, we've got our levels defined, right? We can see the resistance that we found in here. We see the resistance we found here. Well, look what we've done. We've kind of done the same again, right? We've had this impulse move high. We're now correcting down. What have we got? We've got our daily fair value gap in here where price is coming to rebalance. This is still bullish at the moment, yeah? And then we've also got this order block, right? So we can also see this consolidation here. So even if you want to make it easier for yourselves and you look at the area of consolidation and you take the volume, the candle bodies, and say, okay, could we be seeing some kind of support in here? Blue, because that's one of our OBs. Now, price at the moment is correcting down into this level. For me, the clear kind of price leg is this one up. Yes, we do have this black candle, this down candle in here, but for me, these three candles here were the move up and the correction, and then this was the move higher. So what I'm looking for in here right? And you can see as price came up, we left this, how the middle of this, the equilibrium's been respected. So if we start driving down into this level, then that's definitely got interest for me. While we hold the EQ here, this could very well just be shaking a lot of longs out of the market. Now, I do look at liquidation data. It's something that I'm going to look to work with a few companies with our team for a little bit more over the coming months to really bring you some insight on that. But there were a lot of longs that got liquidated here, right? People late longs heading into the market. So something like this can just be that squeeze that you see, Why? Because look at these daily lows where there's ultimately and probably people's stop losses, price coming down, squeeze them out of the market again to generate liquidity here before maybe it pops back to the upside. Now, I don't try and predict price. What I like to do is mark out the levels and then I monitor these levels when we get that kind of interest. And just to give you a little bit more insight in that, let's drop down to the hourly. Sebstar, thank you, buddy. Yeah, no worries. It will be on recording, mate. You can catch this on YouTube. Thanks again for joining the stream, mate. I'll catch you soon. And Sarah, absolutely, we'll take a look at APE. Let me just finish this quickly and then we'll dive straight in. So, as we drop down to the hourly here, I find previous day's highs and lows very, very interesting. PDH and PDLs, as I will call them, or you'll see them marked up on my charts, or PPDLs or PPDHs for prior days high and prior days low, all right? But what I mean by this is if we're looking at the low here, right? Just humour me here for a second. And this is where we're taking the same liquidity principles, we're dropping it down onto lower time frames. If this was a daily chart, remember, we wouldn't be thinking any differently here. When price has taken liquidity from the lows, we expect it to go to liquidity at the highs. Yeah, so swept liquidity there. Ultimately, we're looking for these to be attacked because this is where the liquidity rests, right? And it's not that people are out deliberately hunting your stop losses, but in a way they kind of are. Institutions have very clean, clear levels, most of which are based on higher timeframes, daily, weekly, etc. They're very, very understanding of where the good buy entries are and where the good sell points are. And a lot of that along the way is that a lot of retail traders, I consider myself in this, and basically everyone that isn't, anybody on CT or anything like that, that isn't an institution, a hedge fund, etc., is that there's often hesitancy to buy when everybody's selling, right? But actually, the markets really want that for big players. They want to get everybody selling so there's enough orders to fill the buyers. Therefore, having an efficient marketplace, happy market makers, and people and big players willing to participate, right? So, this is an example. We had this. Now, this is the prior day's high. Notice it's not this day's high, but if we mark up this day's high, which we'll do here, let's just drag this back as well, because when we look here on the lower time frames, and here we have the prior day's low. Yeah, these session breaks are obviously our day dividers. That's 1 a.m. here in the UK at the moment because we are an hour ahead of UTC, but it will represent midnight. So can you see here, guys, how when we're looking back at these key highs and lows, and just a couple of examples here, how price moves in the same way, yeah? So price ultimately has this high from 2 days previously. There's stop losses we can see here, liquidity resting above these. So that wasn't tapped. That was left, that tapped that, but you've got that and that, yeah? People that were short here will have stop losses above here, breakout traders and certain algorithms will attack those positions with buy orders. So it's a good place to look for shorts, yeah? And ultimately, if we go down onto a lower time frame, what we're looking for here is something like this. Now remember, while I'll kind of look, I do a lot of my high time frame analysis on the daily and then drop to an hourly and a 5 minute. A triple screen system typically should probably be a little bit tighter than that. And the reason I'm mentioning that is I don't want to set bad examples. So, for executions on a 5 minute trade, your daily wouldn't really be your high time frame. You use it to see where the draw on liquidity is, but you'd be using a multitude of an hourly chart, probably decanting that then down onto, say, a 30-minute chart and then looking to execute on a 5, all right? But ultimately, what we're looking for here is how price reacts when it gets to a key level, yeah? So what we want to see is exactly the same as on our high time frame charts. Oh, look at all this resting liquidity here, by the way. This, for me, was a really key target for reversal, but we don't. Look how price tells you it's unwilling to reverse there, yeah? But when we hit this high, remember our prior day's high, let me just zoom back. It takes a lot longer on the 5 minute chart, right? Which is this high back here, yeah? Now when we get to this, fine. We're not predicting. We don't want to just stick a limit order on here because we would have lost here, right? And personally, for me, I want to see confirmation. So what do I want to see? I want to see a sweep or a raid, meaning that liquidity has been taken, right? I then want to see significant displacement, yeah? Now, I'm quite an aggressive trader with these moves because I like to get in higher up the move if I can. So what I'm looking for is just the local swing low or the local low. For me, this is that low, yeah? When we break that, it's all about the move down. Again, remember how we were talking about price moving through levels? We want to see that the sellers here in this case are stepping in. The big players are stepping in. Why? Because these gaps aren't like, there are lack of orders in there. That means that price has flown through too quickly. Big orders coming in, moving price aggressively. So we also see, remember like we said about the idea of price ranges, this up move here, if it's not going to act as support, we see it carved through very quickly. There's an expectation that this will then become resistance. So price goes in, we take our displacement leg, we look for our fair value gap, which is in here. That gives us our entry, and ultimately we've already got our liquidity drawn out here, which was from the prior day's low. Now when we react with the prior day's low, we're looking for the same thing, yeah? We want to see price run down. Here's our sweep and raid. Price moves up ultimately, but unfortunately, we don't take out, there's no interim high to take out, and we don't ultimately retrace. Even if if there had been a swing high in here that we could have taken out, we can see as we go up to here in that price leg, we just don't come down. And there's also no fair value gap. All right. So that helps keep us out of that one. We then get this move, similar situation, right? We're not getting that. We're not getting the displacement on this leg up. Price comes down. What happens? We don't get the displacement again here. You get displacement to the downside, right? But price ultimately moves up. You want to see these kind of punchy moves higher. Yeah. You get a lot of these kind of little candles in here. You want to see either a collection of those leading to a clear and obvious break, right? Or you kind of want to stay sidelined a bit. You will get these situations here where you run the low and price just kind of gets away from you. But for me, I like to play the more clean and obvious setups, right? So when we get one like this, do you see how kind of the market really gives you that indication it's ready to move? Bang, bang, two aggressive down close candles, right? And that's what we're looking for. So that kind of goes over the bits and pieces again, aligned with levels. Like I'm saying at the moment on ETH, while we're holding this midline, maybe we purge down deeper into this. But if we start losing this, say we come down, don't really respect this, look to come down, retest this area, then I'm on the low time frames here looking for shorts into here. Ultimately, if we do the same here, we're just playing this down level to level, all right, as we go. However, obviously reversals are equally true. If we see that and we see those impulse moves higher, then that allows us the chance to get on board. So let's take a quick look. I know there was one earlier. I'm going to steam into Ape for Sarah. I know there was somebody earlier mentioned another coin. So can you, I think it might have been Ilcho. Let me know. Pop me a reminder if you're still on here, buddy, and we'll take a look. So let's have a look at Ape. Let's clean this up. Perfect. Hey, buddy, it was Metis. That's it. Well done, mate. We'll take a look at that by all means. So, very quickly, just see if we've got anything here of significance on the weekly. Ooh, I mean, I don't think that took liquidity there. What was the high? 6402. Oh, did it? 640. I think it did actually. So again, like with all liquidity and stuff like that, I think we've just run that. Yeah, you can just see it sticking out like literally by a couple of bucks. Leanne, how you doing, buddy? Getting lost in the charts, awesome. Always such a grafter. Always such a grafter. So sweat liquidity here, right? So why is that significant for me? Because then I'm saying to myself, okay, but on a weekly scale, where's price reaching for? So potentially some orders in here. Let's do that purple, and we'll do that as 2 thick, which is going to be our weekly. We know where our resting liquidity is. Let's just make them a bit closer so it gets my OCD in check. So here, potentially, we see we got a reaction here. Price came in, started to close underneath it. We can obviously imply our rule here as well, or my rule, other people's rule as well, not just mine, obviously. But looking at the 50% here holding, we can see wicking into it. So that's a possibility there, that this is holding. What would we want to see if we expect more upside? Well, I think we just mark this out. Resting liquidity there. If we attack that, don't break down, come back above this, the next resting liquidity is here and ultimately then here on a weekly scale. I'm going to pull that back to there because that's been swept now. So in terms of relevance, if I was looking at this purely in terms of where the resting liquidity is lower, then that's there on a weekly scale, right? So I think if we continue to purge into this OB and we're looking for lower down, I'd be looking at that and also here. That's significant because on a weekly scale, And we'll see this a little bit clearer as we go on to the lower time frames, but that's equal lows there, right? Equal lows, draw on liquidity to the downside. We've got resting liquidity below there. This one, ape, for me, actually looks quite appealing in terms of looking for some more downside. Now we're kind of flipping this onto the daily. We can see we also have daily liquidity resting under here. Something I always kind of tell myself when I'm looking for liquidity and bits like that is it clear and obvious? Yeah, that's what I like to do sometimes. Is it clear and obvious? Equal lows here, clear and obvious. This low here, you can tell that's a clear swing low on a daily scale. That for me is significant. Now, even with this breakdown here, we can see we've got, first of all, you've got this. Right? Liquidity resting above here. This high didn't tag this high didn't tag this high, lots of liquidity. What happens with this candle? Runs into this, yeah? So then we get the sweep. I don't think we tagged the high. We did. We even tagged the highest one, right? So that's our liquidity sweep there. We're going to do that in red. Move this across to here just because that's our current resting liquidity. We'll do that. Let's do that in black actually, just so that it doesn't get too confusing. Yeah, so we've got resting liquidity here. We've got resting liquidity here. Ultimately further down. And this is our daily liquidity here. So we can see where these pockets are. Now that price has come in and taken out that, we've got this corrective move starting lower, but we can also see there's just these clusters of liquidity sat under here, right? Price action in here has been quite choppy on a daily scale. We look lots of highs, lots of lows, pricing quite a tight range, taking out prior day's highs and prior day's lows. Brilliant question here from Wax Shah. So, equal lows are typically targeted for a number of reasons, well, a couple of reasons. If you're looking at it more from the teachings of people like ICT, they're looking at it more in terms of engineered liquidity, meaning that the market makers are basically almost manipulating these to leave an area that's quite obvious to target, same as something like this, right? The way that I see it, though, not that I disagree with him, but certainly my view on the market is that there was significant buyer pressure here for a reason. When price then came back into this level and failed to run it, yeah, but basically left it, and that's why we will call them relative equal lows, right? And let me just tuck that in a bit so it makes more sense on the daily scale. Is there's clearly buyers here. This strong reaction once came back, couldn't even quite run it, or even if it had got right down to it, we can see price then moved up. So whenever you're looking back, right, and you see either a collection of highs like this or anything that looks relatively equal, yeah, highs or lows, these are a good example here. So price came down, stopped here, yeah. Mark those up. And then look what happened when we ran it. Price ran it here and look at that strong reaction higher. There's an expectation, there's buyers there. Then what we want to do though is never ignore the master trend, the overall high time frame trend, which in this case is low, lower high, lower low. So look, we're looking to step into a bearish phase here. So what we're then saying to ourselves is, okay, once we've run those, where's price then ultimately reaching for? Yeah. And we would be looking at the liquidity resting above these. When price comes up, sets this, comes back down, takes into this order block here, yeah, then this cluster of liquidity here is super, super interesting, right? So, put those on the top. So whether you're thinking about it as engineered or just basically where it's resting, there's clearly a cluster of liquidity here, right? What happens when price reaches up into this? It sells off aggressively, yeah? So if you don't have those real crisp, clean V-shaped highs or lows, yeah, where we expect a reaction, then I'm always looking for equal highs, equal lows. Now, it doesn't always work out that you get a reaction there because if we look at these equal highs here, right? Look at what happened when price moved into this area. However, like with any kind of support and resistance flip, there can always be significance to it. Not always, but sometimes, right? So if we're expecting price to sell off here and we get absolutely no reaction, price blitzes above it, comes down and finds support there, then what we can ask ourselves is, okay, is looking at the strength of this move, is this looking to take price higher? We ran this liquidity here. Right, price corrected down, but again, it finds support here. Okay, so if we're not seeing a rejection here, once we see acceptance above it, it can provide a platform for price to move up. So knowing our resting liquidities here, yeah, when price came up to here, failed to run that, corrected back down to this level, we could look there on the lower time frames and say, okay, do we have any kind of bullish reaction here? So we can start by looking at it on the hourly. We see price comes in, stops here, right? Then we have this flush lower. Now, this is quite a tricky leg here to place a Fibonacci on. So you're either taking it from the consolidation and up, which is how I favor it. Yeah, because we've got these two consolidation candles here. So when price came up to here, I would have had it and then extended it up to here. Two principles here. If I'm using the principles of premium and discount, we're down in discount, the bottom 50% of this range, meaning that we're favoring long setups. And if we move to our traditional Fibonacci, we can also see that we're engaging with the golden pocket here. All right. So as price comes down into here, we can then drop down onto a more executable time frame. And ultimately, what we're looking for is price to sweep shift market structure higher, which it does here by taking out this high. We then take our range, and we look for our fair value gap that's down in discount, which is here. That gives us our entry, all right. And all we're looking to do with trades like this is we want to enter here. Your stops go below the swing low or below the origin of the FVG. Both are the same in this case. And then ultimately, we're looking to target liquidity resting above these highs. But we're also going to be aware of this FVG, meaning that if we're actually in a position where we're going to get more bearish continuation here, yeah, that's where we would look to scale out. First of all, what would we get here? Yeah, 1.58. It's not a killer trade, but 2%, you get a decent return on that here. Price ultimately comes to correct lower. This is obviously the challenge when you're balancing lower and higher time frames, right? But once we get that correction lower, look at the energy, in that move lower. Yeah. If we then pop our volume back on, remember, like I was saying previously, right? You're looking for this, you're looking for those high volume standout down candles. Yeah. And then you're playing the opposite of that. You're looking for that to find a level of support. Ultimately, comes up, sets this high. This isn't how I trade these moves, but for my trade, I wouldn't have got in here. It just didn't have the return for it. But I know some amazing traders in this space, people like Crypto Chase, for example, who's just an immense dude. Do go and check him out if you haven't. Brilliant trader. But look, simple SR here. Resistance, resistance, close above, retest, retest, price moves higher. All right. So whatever your entry technique is, using those. But to go back to your point, Whack, when we see these equal highs, equal lows, they become an area of interest purely based on the fact that we believe it to either be engineered liquidity, yeah, or that it's just a natural area where price has had two or more very strong reactions, be that buying or selling. So in terms of where we are here with Ape, now we're back out on the daily scale. We can see at the moment that even if we're taking it from here, we've just dipped ourselves down into the lower 50% here, right? So do it so it stands out a bit more for you guys like this. Meaning that lower 50% means we want to be buyers, higher 50% means that we want to favor sellers. Yeah. So now we're coming down into this area here. If we start finding some support, building some structure on a lower time frame, yeah, which for you guys is if that's our line here, We want to see price coming down, yeah, into a discount. Then we want to see a low run, that high broken. For me personally, I'm then looking for price to return to a fair value gap here. This is our displacement leg. Yeah, so we'd want to see something down in discount, down in our 50%. Price tags this. The key things here are that we've swept liquidity here. Yeah, so there's our sweep. There's our structure shift. And in this move, we want to see that impulse. We want to see that punch higher, all right? And getting that off of these equal lows down here, for example, could be a thing of real beauty. Yeah, so if we do have a deeper correction down into here, I'm certainly going to be monitoring this. In fact, I'm just going to pop an alert on here. I mean, really make sure you're using your alerts, guys. So approaching ELD, meaning equal lows on a daily, pop that in there. It's going to give me a little heads up before price then starts coming down into here. Now, obviously, I'll be monitoring it to see if we come back up. I do think if we start getting above this level and holding, if we run this liquidity, if we take this line across, bearing in mind we've got this liquidity resting here now as well, so we up that line to here. What you want to see in terms of being bullish is this being met with a real kind of impulse move higher, price coming into here, yeah, struggling to take that, a little bit of a sweep, market structure break again, and ultimately we can see here that we've got this level, these clean highs, we would target that above, but actually this fast move down, yeah, as we can see by this fast move up, they can often get retraced quite quickly, but the reverse is also true. This very quick move down here was also retraced pretty quickly, right? Correction, and then the rest of it was taken up as well because there's a lack of price action in there. So that's definitely where I'd be looking at on APE, right? So let's take a look at Metis, wasn't it? Metis. Let's take a look. Have we got a perpetual market? We do indeed. Matic. Metis. Let's have a look. DT. Do we have a perpetual market? No, we got some spot. Let's have a look at. Let's take a look at the one on KuCoin. We like KuCoin. Okay. Look, you got this lovely rounded bottom here before that pump. That was really nice. Beautiful swing fail here for the correction down. Let's have a look. If we take the whole leg here. Let's take a look. Yeah, nice. Holding the golden pocket to the 705 area. Currently holding now above the 0.5. Had this little purge lower again. Kind of in a situation here where we've taken this liquidity out. Now price is kind of finding itself hunting for liquidity a little bit lower down. So on a daily scale, that's the next low here. Now again, if we're zooming into this a little bit closer, we've kind of got this little cluster of lows here. So I'd definitely be aware of these two here as well. Ultimately, those going lower down. No real kind of inefficiencies on a daily scale here that we're looking to fill. We kind of drop down to a 4 hour. See if that adds a little bit more data for us. Obviously, high volume, high bearish volume spike here. So, again, natural to the fact that price is really starting to drop aggressively here. But when we come off the back of this high volume bullish spike here, we notice led to a slight correction. High volume bullish spike here, correction. It's looking at it in terms of like price getting its point to a crescendo. See this very candle lining up here. Sorry, let me zoom in, guys. This very candle lining up here with this one. Big bearish candle. Price comes in here. Nice little level, starts to correct higher. Now, one thing that we want to be aware of here, then we're dropping down to a 4 hour scale, is that we've taken out that. Let's just do that as a dashed line. We know that's a lower time frame. So in terms of continuation here, we would look for price to set in a bottom. Let's just say, for example, that price finishes where it is, yeah? And it leaves this fair value gap here. We would then be looking for price to draw down a little bit lower, right? For this or part of this, probably a little bit less than that, to finish within the 50% of our range. Right, so let's say, for example, price retraces down to here. Then what we would want to do is move that so that we've got that within our premium area. And we would then look for price to return to this. And then on a lower time frame, we would see what price does in here. If price looks weak and it starts to break down, it gives us our bearish setup, which is that sweep of liquidity higher up, that impulse move lower with displacement, and energetic move lower on the lower time frames. Then we would look to trade into that and then look to trade that lower down to the liquidity we talked about down here. However, on the flip side, if we get a move like this and then price manages to really rip through this, come back and treat that as support, then that would be bullish, right? And for me, I'm then looking at that and saying, okay, well, I'm then looking to target liquidity higher up. All right. So at the moment, this has been in a really nice bullish run. We can see here, bearing in mind, this is a 4 hour, higher highs, higher lows, higher highs. We've taken out some significant liquidity here. Actually, we don't want to cherry pick really, but if we look across at these here as well, you can see this high to this high here are equal highs. Right, that and that, very, very level here. So price has run up into here, had that initial pullback, then it's come back to complete the swing fail. Often when you see these swing failure type patterns, that's where a high gets taken out like this. Price is trying to move above it, sets a new swing high, but marginally before seeing a big sell-off. That's seen as price being driven up to take liquidity above this before breaking down either for a deeper correction and sometimes possibly for a reversal as well. So, Sarah, I hope that was good for Ape. Ilcho as well. I hope that was good for Metis. I think we can just throw in Danius. Are you still here, bud? QRDO. Let's have a look. Perfect. That's the one. Oh, okay. It's looking interesting here. Again, see, like with this high volume spike here, yes, I know we've come on this high volume spike here, but if we just kind of overlay these, yeah. Oh, you're welcome, Ilcho. Very welcome. Yeah. So big bullish one here, reversal coming down. We had this big bullish one here, but actually we then covered that with a bearish one here. So may have been expecting continuation. But again, look, big bearish standout candle here. Price ultimately gets that nice rounded bottom and moves higher. Big bullish candle here, we get the rejection. Big bullish candle here, we get that pullback. Again, just something that I look at with volume is while all of this is going that way, is there a counter trade the opposite direction? Not to enforce my will on the market, but just to see if there is. Now, with this one on a daily scale, this is quite clean actually. We can kind of just jump straight into our inefficiencies here, or imbalances or fair value gaps, right? So this one, you want to see this hold. Again, if we're going to pop our EQ on this, yeah, we still need to see how this closes, but ultimately price couldn't close above there, couldn't close below, couldn't close below there. Now looks like it's kind of making its way a little bit deeper here. We have this and this. I know it's a tiny wick, but I'm taking this one from the wick because this has a fair value gap immediately after it. Make that dark blue. Yeah, let me zoom in so you guys can see that. Yeah, that's the fair value gap here, the gap between that candle's wick and that candle's wick. Because we've got that directly after, then I take the order block from the wick, not from the body, although they're pretty much the same thing there. So it doesn't look like much, guys, right, on this scale. But from here to here, it's like 8%. Yeah? So if we drop down to an executable time frame, this range in here, gives us the opportunity. And again, I certainly wouldn't be looking to this on an hourly personally, but look, we've set these wicks down here. Yeah. So I think we want to be aware of those. So if we got something like this from price, right, breaks down below here, then kind of comes back into this area here, but fails to get that kind of V recovery. Because look, what that level was significant before. Price came in, we got these long upside wicks, but now it's kind of showing that weakness again. We'd want to see price kind of draw into this area here. Then we'd move down to a lower time frame, right, and we would look for a move to the downside based on that breakdown pattern that I was telling you guys about earlier, which is how I kind of approach all of my trades, whatever time frame it's on. Yeah, same as this one. You want to see a raid from a prior level, or you want to see at minimum a local sweep, takes out this liquidity here. This is that move lower. Now, I know it only just marginally takes out that low, but for me, that's why as an aggressive trader, I'm allowing or make allowance for the shift in structure. Yeah, meaning that higher low, higher high, this takes out that low, consequently making a lower low. Then I'm looking for price as it does here to return into this fair value gap, and ultimately then targeting lower down. And again, these equal lows here, this kind of cluster of lows, we can see when price dipped into that first of all, and also into our fair value gap, price got bought up quite aggressively, but it failed to recover market structure, all right, and ultimately led to more downside. So with this one now, I'd be looking for this kind of move here. I think if there's more downside to come, I'd want to see it break down under this level here, get our breakdown pattern, and then trade it into liquidity down here via this low. All right. However, if we get a good reaction here, yeah, and we see this more kind of like V-shaped recovery, then I'd be looking for pullbacks here and then potentially looking to target liquidity resting above here. All right, guys, look, around about an hour, give or take. All right, I hope it has cleared some bits and pieces up for you guys. If there's anything that you do want to see on these streams, do just let me know. You can reach out to me. If you want to come and trade with us, you can get the trading team calls on Bybit for free. All you need to do is use the ref link, which you can find in the description. Really small deposit, and you can smash that out. And if you want to come and join us over there, make the most of it and come and grab one of the free trials. Look, different communities suit different people. All I would ever say is just try it out, find ones that are for you. Don't let yourself kind of get talked into it. Yes, you'll see promotion offers. I'll share promotion offers to bring people in. Of course I will. But just come along, ask lots of questions. The people in this chat, and I know exactly who they are, who are members of our community, are always in here, always asking good questions. And if it's for you, brilliant. If it's not, then there's some other really good people out in the space doing it as well. But come and try us out. If not, come and reach out to me on Twitter, BC_Richfield. I'll be live again on Monday, guys, but I'll be in and around Twitter all over the nest for the rest of the week, obviously. So just one last thing from me, which is to wish you guys all a fantastic week. Remember as well, there are a lot of important things in life outside of trading, right? Make sure to get outside, make sure to see your loved ones, tell them you love them, and just be good people and try and get out of life what you put in. All right, guys, before I get too preachy, lots of love to you all. Have a fantastic week ahead. Do trade safe, and I'll catch you legends around the nest.